Hi everyone, we are delighted to have Jamie Douglas, Fund Manager for the Polar Capital Global Healthcare team, here with us today for an Edison TV interview. With 21 years in the industry and a PhD in medicinal chemistry, it'll be interesting to hear about Jamie's investment approach and which healthcare stocks in his portfolio is particularly excited about, specifically within the Polar Capital Healthcare Trust, which Jamie co-manages. So Jamie, thank you so much for your time. First of all, how are you and how have you found working from home?
Good morning. Yeah, no, thanks ever so much for the opportunity to chat, and also thanks for asking. Working from home has been absolutely fine. We're very fortunate in this industry, extremely lucky that we can function effectively from the home. And so I'm coming back into the office now, but certainly that hybrid between the home and the office has worked very well.
Great. And for those listeners who aren't as familiar, what funds do you manage alongside your team of 7?
So, as you rightly point out, we do have 7 here in the Polar Healthcare team, so we're extremely fortunate. And the 2 funds that I spend most of my time on are the Polar Capital Global Healthcare Trust, or abbreviated to PCGH, and a UCITS fund called the Blue Chip Fund.
And just talking about the portfolio, could you touch on any subsector weightings in your portfolio and how they might change in the future?
Yeah, so the PCGH is a global healthcare product, and it can really invest in any subsector across the healthcare continuum. And so that could include subsectors such as pharmaceuticals, biotechnology, medical devices, even healthcare insurance companies and providers, and also life sciences and tools. So it has a very, very broad remit, and we can really move the portfolio wherever we see fit at that particular point in time.
Great. And just specifically, do you think a focus on large cap means that the trust misses out on the medical tech area that's caught everyone's attention recently and is typically associated with smaller companies?
Yeah, no, that's a really good observation, a really good question. You rightly point out it does have a large cap focus, which we feel does differentiate it slightly from some of its peers. But actually, I would respectfully disagree for a couple of reasons, if I may. So firstly, we can offer multiple examples of larger cap companies that are investing in highly innovative products, devices and services. And so good examples of that might be telehealth, this idea that you can interact with a healthcare professional virtually. Large cap companies are also investing in minimally invasive medical devices that are also investing in technologies that allow patients to maybe manage their health via remote monitoring or manage their health at home. And so that's the first point. And the second point is the trust can actually invest in smaller companies. We call it the innovation portfolio. And I guess some of these more disruptive technologies are more obvious and tangible, but certainly we have the opportunity to do both.
Great. And have you made any recent changes to your portfolio?
Yeah, so no, that's a fair question, and I'll answer that by looking back over the last 6 months. And actually, the positioning has been reasonably consistent over that period, with us adopting a constructive stance on subsectors, including biotechnology, life sciences, tools and services, and managed healthcare or US insurance companies. The other constant in the portfolio has been a relative underweight stance on the pharmaceutical sector. But the thing that really, really excites us is that we believe we've identified a number of underlying themes that we believe could deliver durable growth in the medium term and interesting investment opportunities. And those kind of underlying themes might include disruption of the delivery of healthcare. So that's companies that are investing in products and services to generate efficiencies without compromising the quality of care. We believe that the outsourcing of non-core activities is also a durable theme. We're also really interested in prevention, which really should be the cornerstone of all public healthcare systems. And I'm not just talking about vaccines, but also potentially a much wider use of diagnostics, because if you can diagnose accurately an underlying condition for a patient, you can set them on the right treatment path. And so we also believe, and I think COVID-19 speaks to this, that the healthcare industry is highly innovative, not just in drugs and vaccines, but also medical devices. So they're some of the themes that really excite us, and we hope we can get some investment opportunities out of those themes.
And just touching on the performance of the trust, correct me if I'm wrong, but according to the AIC, I noticed that over the last 5 years, you've had a 57% share price total return. Are there any catalysts in place that will improve this performance going forward?
Well, certainly the aim is, and one of the objectives is to try and outperform the benchmark. And actually, we just recently published our interim report for the trust, and that was for the first 6 months of the financial year. And as a reminder, our financial year ends in September. And the net asset value per share outperformed the benchmark by just over 2.5% over that period. And so hopefully, fingers crossed, we can maybe continue that momentum.
And great. Talking about the net asset value, historically, how's the trust traded relative to its NAV?
So since the launch back in 2010, the trust has been trading, and these are all rough figures, on an average a low single-digit discount to its NAV. It did have some very brief periods that was at premium, but since we changed the mandate, and that change came in June 2017, when the trust went from being an income-focused product to a growth-focused product, the average discount has widened roughly to the high single-digit level.
Great. And just moving on to your dividend policy, I noticed that you're only paying a small dividend of 0.8%. Do a lot of your holdings have larger dividends, and what will your policy be going forward?
So when the original launch of the trust was back in 2010, as I mentioned, it did have an income focus, but we changed the mandate in June 2017, and the focus went from income to growth. And so that really is the focus of the trust as we move forward. In terms of, directly to answer your question, within the healthcare universe, a lot of the income sits, or a good portion of the income sits in pharmaceutical companies. And so when you're carrying an underweight for that particular subsector, then that has implications for the yield.
Great. Well, thank you so much for your time. And it would just be great if, to finish off, you could make any concluding comments as to why investors should consider buying the trust.
Well, I think in terms of healthcare, we're really excited about some of the structural changes that are going on. And we believe that those structural changes are really yielding some interesting and durable investment opportunities. I touched on some of those themes earlier. And this idea that delivery of healthcare is going to be disruptive. We're a highly innovative industry, I believe. Outsourcing will continue to be a theme. And so that's really the focus for us. And we believe and we hope that some of those underlying themes should yield some interesting opportunities as we move forward.
Great. Thank you so much.